everyone. Leah the trader here from Trading Mindset and Data. I want to go over the scanner again. Many of you are asking for the last version of the video of the scanner, so let's get to it quickly, make it short and understandable. Number one, on the left side, you see unusual flow, order block flow, right? OB flow. So when a stock has a large buy or sell order from big investors or institutions, it's shown in green or red, right? So these are the ones that you want to pay attention. Green means big buy interest, red means big sell interest. The next to it, we see a percentage daily change that shows how the stock price has changed compared to yesterday. All right, so we see how the price went down or up from the day before. That shows you kind of the momentum. Then 3 is fair value gap, FVG. It measures how quickly shares are traded compared to their recent volatility. High speed is potential trend continuation or reversal driven by big investors. So right here, we don't have any data for today. If there is a data, you can pay attention to it. Implied volatility at the money, 3 months. It's implied volatility at the money for the 3 months term. When big funds hedge with at the money options, you can see the rising IV when institutions expect bigger price moves, or falling IV when they expect less implied volatility and less move, right? So you see decreased or increased. We have BLDE, for example, here, increased volatility. So you can then go next to it to change price target change, right, in percentage that tracks how analysts' price targets have changed over the past week. All right, so if it's up, it's bullish. If it's down, it's bearish sentiment. That's how you read it. All right, so that's the change of target. And let's get to the fun stuff, to open interest change. That's a very important one because that's about the options. And I did a video in detail on this. It's on our YouTube. So it shows how much the total number of open options contracts changed since yesterday, right? Focuses on how volatility expectations 1, 3 months and 1 year shift, not just calls and puts, right? So you can see how many more contracts are getting opened on those names. So then you have the open interest RSI speed. So that basically measures the strength of institutional interest versus the past 20 days. All right. And that's the RSI. And then next to it is open interest speed. That is showing how fast open interest is changing. Quick spikes are possible institutional moves before news and events. All right. So that's all on this left side. Hope it makes sense. Again, the open interest RSI just measures the strength, and the open interest speed shows how fast open interest is changing. All right. So let's go to the smart flow, because we want to know what the smart money is doing. So smart flow, it combines large trades, order blocks, with changes in options activity. Big funds often buy or sell stocks and hedge with options simultaneously, right? They are hedging. So you buy what is a classic strategy, just for an example, is buying shares and selling calls immediately after you buy them. That's a very cool strategy. A lot of people I know, especially the old school traders, they do it, right? So it's kind of a hedge. So that will show you that flow. And next to it, you have average option activity 1 and 3 months. It looks at options volume changes and volatility shifts over 1 or 3 months. High activity plus volatility shifts equals bullish or bearish signal. So there you can read calls bought, who is buying, and the signal next to it is bullish, right? So then we have the term structure shift next to it. This row, when volatility curves align bullish or bearish, it confirms the trend direction, right? So we have call bought, bullish. We have increase in open interest, for example, on this stock, increased. You can all see this in the scanner and then kind of find the highest probability trades and use it for your own information. So next to it, we have potential shift, detects momentum changes combined with sudden trading spikes like fair value gap. High volatility equals potential breakout or breakdown. Again, from today, we don't have any data there. Sometimes there is, sometimes there is not. Don't waste time, move to the next one. So, most active options, 20 days, highlight stocks with the highest options volume in the last 20 days. Green means more buying, red means more selling. So what is the buying today? It's Quillis and Plug. And selling we have on APLD. All right, so that's kind of the colors that you can look at. If it's something you are interested in trading, if it's your stock, then you would say, okay, I see there is something happening on the 20 days volume. Next to it, we have options velocity versus 5 days. Compares current options volume to the 5-day average. Spike equals institutional interest picking up, right? So you see there is institutional interest picking up in Delta Airlines, BTGR, Plug, and all those names. Next day we have options volume, okay, and 2-day RSI. So it measures options trading strength versus the past 20 days. Again, you see the numbers that are increasing has way more options buying than in the last 20 days. So it kind of shows you, it's all like for the momentum. Then we have momentum score. I did a huge video on this one on YouTube. Please check it out in very detail because this is just an overview. It basically compares buying pressure versus selling pressure. So higher buyers dominated, lower sellers dominated. If you have the green numbers, like 20-30 is almost a FOMO. When you have around 0 is unchanged. And 10 is like a slight bullishness, which also confirms a signal to buy or sell for that fact. If it's minus red, you know there is a huge selling going on. Next we have flow signal. Combines technicals, order flow, and options data. Signals can indicate trend continuation, pullback, or bounces. And it's even writing what's happening. So you can just read it and see what's happening right now in that moment on flow signal. Then we have order block flow, tracks large institutional trades from the previous day, updated in the morning since many big traders happen after market close, right? So this is something you can see and see if there is like after hours trading happening. That's a very good one. So you see the money coming in or out. Then you have order block flow with RSI, measures how significant the block trades are versus 20 days. So again, if you have it in green, it's elevated number, then you know there is something significant happening. And next to you have the speed of the order block, shows how quickly big orders are coming in, indicating rising institutional interest, right? 2.16 times faster than before. So institutions are piling in. And so last part of the scanner are the options, and it's the out-of-money skew 1 month, 3 months, and 1 year. It tracks the difference in volatility between out-of-money calls and puts, and it's very useful for understanding market sentiment, right? You might want to go on a short-term trade long, but the long-term you want to, you don't want to sit there too long if it's just a 1 month bullishness. And if you see bullishness on all three, then you're like, okay, this could be good long-term position trade / investment. So bottom line is the scanner helps spot institutional activity and potential market moves before they become obvious. Green signals often mean buying pressure, red means selling pressure. Use this tool, please, to stay ahead of retail traders and align with smart money flows. But again, it's not given. We always tell you this is not 100% like everything in trading, like nothing is 100% even technical analysis. If there is a stock you're interested, you can take the stock, you look at the situation with the institutions, then you need to understand technical analysis, draw a chart, and find your own entries and exits. And a stop loss, because if things fail, you can just say, oh, I saw it on the scanner. Guess what? Institutions lose money too. Smart money is sometimes dumb money. Everyone does lose money. Hedge funds are losing money. So you are not protected even with all the information in the world you have. There can be news they come out. You always have to have a stop loss and risk management in place. All right. Thank you for listening. Ask if you have any questions. Bye.